Crypto trading volume has cratered by 43% in the last few weeks. By the time you're watching this video, you'll know why that's significant. And you'll also know why this turn of events could be a good thing. So, lovingly, tenderly, gently, smash that like button for the YouTube algorithm, and we'll dive right in. You're watching Finance Squared, and I'm your host, Derek West. And cryptocurrency is down 43%. Boy, that seems like a ton of lost volume. What the heck happened? Well, let's dive into the data. According to Crypto Compare, a price and volume tracking organization, trading in general over the month of June fell 42% when compared to the previous month, May, with a total of $2.7 trillion less dollars worth of crypto changing hands. In addition to that, derivative trading also suffered a sharp decline, falling 40.7% month to month to $3.2 trillion US dollars total. Because of this, internet traffic to exchanges fell drastically, dropping 42.2% month to month, with Binance, one of the most popular crypto exchanges on the planet, experiencing a sharper drop of about 56%. Despite that, Binance still managed to maintain the top position in trading volumes. Good for them, right? Now I say trading volume. What does that term mean? What am I referring to there? Well, trading volume for cryptocurrency or stocks or bonds or real estate, etc. That's talking about the amount of an asset that's changing hands between investors. It's a generic way to measure how many people are buying and selling the asset. In our particular case, I'm talking about crypto. Why is this important? Well, a metric that a lot of traders rely on is the volume of trading happening for an asset, particularly in volatile markets like cryptocurrency. For example, if the price of Bitcoin goes up and there's also heavy trading volume, that tells you that a lot of people are making moves, and in aggregate, buying the coin is driving the price up. Therefore, it's more likely that the price level will remain the same or continue to rise. But on the flip side, if the price of Bitcoin drops and there is minimal trading volume, that tells you that a small amount of people are backing the trend. Some folks say that volume is the most important metric for a cryptocurrency. Now, I'm not sure I agree with that assessment, but I suppose it depends on your goals and aspirations for the coin. But nevertheless, with volume, you can infer the direction and movement of a coin. Because cryptocurrencies don't produce financial statements. Unlike securities like stocks, there is much less information and metrics to compare one coin versus the other. It really is just a feel each trader has about the movement of a coin, whether it has a strong development community, whether it's being embraced by the larger crypto world, things like that. And of course, the volume of the coin, in other words, how many coins are trading hands on various exchanges day to day, is one of the few metrics that traders can rely on to help them gauge whether a coin is going to go up or down in price and volume. And for the month of June, that metric has shrunk notably. Let's take a look at some of the reasons why. One of the biggest reasons for the slide in crypto trading volume has been the Beijing Bitcoin beatdown. How about that for alliteration? And they're not letting up in any respect. Recently, there have been headlines about Chinese authorities ordering a software maker to close over their mere involvement in crypto and crypto trading. A company called Quado Cultural Development. Well, they shut down to comply with direct orders from China's authorities, namely the Chinese central bank. Its crime? Facilitating crypto transactions using the software that it developed. The authorities dutifully reported that they took action to, quote, prevent and control the risk of speculation in virtual currency transactions and protect the safety of public assets. But it doesn't stop there. The central bank has informed the people that companies in China are not permitted to encourage crypto trading in any way, including physical trading venues, or even in commercial displays or advertisements. And this is in addition to banning direct or indirect cryptocurrency services to clients. That stated, the wind has been blowing in that direction for cryptocurrency in China for at least a couple of months now. And savvy crypto geeks would have seen the headwinds coming from China for a couple of years now. Ever since the largest crypto exchange, Binance, which was founded in China, was effectively forced to leave China following its ban in 2017. But recently, China has been cracking down on crypto with a vengeance. Financial institutions in the country are not allowed to offer crypto services. And auxiliary crypto businesses like miners have been either severely regulated or they've been forced to halt operations in parts of the country. Crypto influencers on Chinese social media have also had their accounts blocked. The effect of this crackdown on global crypto activity cannot be underestimated. The aforementioned trading volume is but one of the consequences. But why all the hubbub right now over crypto in China? For the longest time, China and other Asian countries have been leaders in the popularization of cryptocurrency. And cryptocurrencies, including Bitcoin and many other tokens, have been considered by many to be the way of the future for money, contracts, and finance in general. China has been making a ton of noise about trying to be the leader in the tech space in 2035. Why would we want to squash this technological trend in its rhetorical cradle? There are a couple of big reasons that I will explore in a different video on this very topic. Be sure to subscribe with post notifications turned on so you get it when it drops in the very near future. But suffice it to say, the crackdown in China has been a catalyst for the global volume decline in cryptocurrency trading volume. There are a couple of other big reasons as well. Let's look at Binance's role in all of this. Binance has been having a bad month in terms of trading volumes, as we mentioned earlier. It has had a sharp drop in activity of 56% month over month. What is the cause behind its particular woes? Well, China hasn't been the only country cracking down on Bitcoin and crypto. Europe and Britain have had crypto in their sights lately, and Binance has been a casualty of that focus. And to be fair, Binance has had its own problems it needs to deal with. And I'm of course talking about the mid-May crash that Binance experienced, which denied traders the chance to exit their positions all while the price of Bitcoin was tumbling. That little glitch in the Binance Bitcoin matrix cost several traders small fortunes, including traders who used leverage to place bets on Bitcoin's reversing its downward slide. And then in late June, in a completely unrelated matter, the UK Financial Conduct Authority banned Binance Markets from undertaking any regulated activity in the UK, while at the same time issuing a consumer warning listing concerns over Binance's anti-money laundering standards. A British bank, Barclays, blocked customers from sending money to Binance. And a payment processor in Europe stopped processing transactions with Binance, citing compliance with the regulatory authority's order. This pressure from regulators in the UK and London has understandably spooked traders and crypto enthusiasts alike who trade or had traded on Binance. The subsequent drop in volume is to be expected. And then, of course, is the Bitcoin price slide. Let's take a look at that next. The slide in Bitcoin's price, which has seen it go from a high of about $64,000 per token to a little under $33,000 per token, depending on what time of day it is you're watching this. In fact, let me check here. Yeah, this time it's about $32,000 as I'm producing this video. But that price fall has seen quite a few crypto traders lose their spirits and enthusiasm, not to mention their shirts, trading crypto. That's not to say that they've given up on the token, but it is saying that the hype around Bitcoin may be cooling off for a little while at least. And you know what? That's a good thing. Here's why. You're probably calling me crazy here. How could this possibly be a good thing? Particularly if you bought into Bitcoin at 60,000, thinking it was going to 100,000, and you didn't want to miss out. If that was you, more than half of your money has gone straight down the drain, and you're probably looking to sell, sell, sell. Well, hold on just one second, cowboy. Bitcoin and cryptocurrency was invented to provide a decentralized mechanism to express value. It has been and is the first currency that did not rely on the faith and credit of a government or the amount of a particular metal held in someone else's vault. The value in it is not, I repeat, not that it's worth hundreds of thousands of dollars, or tens of thousands of dollars, or tens of thousands of yuan, or whatever currency. The value is that it is unpegged from the banks and corporations that have their own agenda, noble or ignoble. Yes, it is true that lower trading volume implies lack of interest in a trading currency. Maybe the interest in using the currency for trading goods and services will rise, which is its true utility. Bitcoin, or any cryptocurrency, is not much use to anyone sitting in cold storage or on a hard drive somewhere. It's useful when it's helping a small business meet payroll, financing a company's expansion, or simply enabling a lovely evening out with you and your loved ones. People are predicting that if Bitcoin falls below $30,000, then all bets are off and that it's going to fall to $10,000 or worse. And this fall will affect cryptocurrencies across the board. If that happens, and that's the worst case scenario in my opinion, I say good. I welcome that revelation. And I say that as someone who purchased Bitcoin at a little over $300 a coin and thought it was expensive way back then. In all honesty, Bitcoin and other crypto tokens make much more sense at slightly lower values, with lower values that encourage enthusiasts to actually trade their tokens for goods and services, and not just hold them, hoping that the price will go through the roof. I say you should enjoy this time of low crypto trading volume and low crypto prices. I have a feeling in a little while, even if the prices fall a little bit further, that things are going to be pretty crazy all over again. The question is, will you be ready to profit when the time is right? And if you're watching channels like this one, you will be. So make sure you subscribe with post notifications turned on if you, like me, love all things personal finance, including investing in cryptocurrency, stocks, bonds, real estate, learning about credit and debit, and how to turn your ordinary life into an extraordinary life, all through the power of your personal finances. Also, like this video if you liked this video, and drop us a comment on why you think lower crypto trading volume is a good thing or a bad thing. We're all dying to know. And remember, a goal without a plan is a wish. A goal with a plan and no action is a wish list. Take it easy, guys. Be on the lookout for my next video dropping soon, and I'll catch you next time. Peace.